I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, Andy Hoffman. He's from Miles Franklin. They are one of the largest precious metals dealers in the country. He's the marketing director, also a prolific writer, and he's spot on. Andy Hoffman, thank you for joining us today from the Rocky Mountain time zone.
It's a pleasure to be here always. So many good things to talk about.
Well, in the pre-interview, I said, send me some of your latest articles and let me know what you're thinking so I can take a look at it. And fascinating. And I think one of the strings to your salient point is that, you know, when they had this big market swoon, this 9% drop, 1,300 points or so, 1,400 points, whatever, and you said the Fed freaked. They panicked. They freaked out. Talk about that.
Right. Well, let's just get this straight. The Fed is not here to do what their dual mandate says, which is to support full unemployment and stable prices. If that were the case, they'd be considered the most incompetent organization in history. Their job, and it isn't even so much to, quote, support the banks, it's their job is to make sure that people think things are fine. So when they say that they are tapering or they're QEing, what they're really doing is behind the curtain doing whatever it takes to make it look that way. For instance, I wrote an article last year called Proof of the Tapering Mirage. Their own footprints show that they were QEing like 130 billion per month instead of the 85 billion they were saying. And that was before the Chinese started selling treasuries late last year, and then all of a sudden this mysterious Belgian buyer came in, which was clearly the Fed. But things changed completely when interest rates started falling. Now recall, last April, that's when they started smashing gold and starting with this whole taper talk. They figured that by about this time they'd be ready to start hiking rates, etc. And the fact is that the global economy has collapsed. Our real economy has certainly collapsed. Forget their fake PMI numbers or their ridiculous NFP employment numbers, which are as transparent as can be. The economy of the world is getting worse and worse and worse. And as a result, no matter how hard they try to say, yes, there's recovery and we're tapering, interest rates just keep falling and falling and falling. That's what I called in an article last year. I called it the most damning proof yet of QE failure. In other words, plunging rates despite all their hype about recovery and tapering. And it's gotten worse and worse and worse. For a while, they were holding the line on 2.6% on the benchmark 10-year yield. And the reason they were holding the line there was because last year when rates surged after the initial tapering talk, that was kind of the floor level, a support level. But since then, it's broken 2.6 and 2.5 and 2.4 and 2.3, and we even hit below 2% last week briefly. And here we are. I wrote yesterday, 2.2 is the new 2.6%. So the fact is, sometimes they're QEing far more than they say to make it look like what they're saying is true, and sometimes they're doing far less. Right now, I think they're selling hand over fist to make it look like the economy's not falling apart. But the fact is, it is. Look at currencies, look at commodities, and look at the real economic data around the world. And as for, the panic, I mean, as you said, the Dow Jones propaganda average, as I call it, fell a whopping 9% from its all-time high. Not all-time high when you include inflation and survivor bias, but its all-time high. And they absolutely freaked out. Within minutes, they had the PPT running it back up. And no less than six Fed governors in the space of 3 days came out and either hinted at or overtly called for an extension of QE and an extension of ZIRP. And this is after a measly couple of percent drop in equity indices. That's how terrified they are. And remember, next week is when QE is supposed to end.
Why are they so terrified? I mean, why are they've been telling us how we're in a recovery and things are going great and things are really good and we're expecting a 4%. We just had 4.6%, growth revised up in the second quarter. Looking good here. Things are good. Why are they freaking out? What's their fear?
Their fear is a loss of confidence in the dollar. It's that simple. And of course, a loss of confidence in the financial markets because that's their last bastion, as I've been writing forever. Since 2008, all that they've had left in their arsenal is money printing, market manipulation, and propaganda. The propaganda doesn't work anymore. No one believes in recovery. Everyone knows it's not true. The money printing, well, they still do it behind closed doors. They may say they do X, but clearly they and everyone else, look at Japan, look at Europe, are doing the same thing. And that just leaves the market manipulation. If the Dow were to fall, just think about the perception. If the Dow fell, 1,000 points in a day, or let alone It fell 3 or 4,000 points during October. They called it the crash of 1929. I mean, look at today. Today, the Europeans, this is, I'm going back and forth, 25 European banks failed the stress test today. And that's after last month, the largest bank in Portugal went under and was nationalized. The banking system as a whole is on the precipice right now. And the slightest drop in markets and confidence will cause the whole 2008 to start all over again. That's why I wrote last week an article called 2008 with one temporary exception. That temporary exception, the PPT's ability to keep the stock market up so there's confidence. Once that confidence leaves, everyone races out of the currencies. They race out of the stock market, and the whole economy mirage collapses.
Well, people do know, money players do know the Plunge Protection Team, or the official name, the President's Working Group on Financial Markets. They do know, and a lot of people, Greg Manarino I have on here all the time, and he knows this is going on. Traders know this is going on. They're playing the manipulation. They're playing the what will happen, what they think the Fed will do, or the Exchange Stabilization Fund will do. They know that. I guess what you're saying deeper is that they know that, and when they know it doesn't work anymore, what happens then? Exactly.
They are front running, and it's no different than traders in the gold market who are front running what they know the cartel does every day. This is look, I was in the hedge fund business for many years before I left to do this stuff. Everyone knows that you cannot be short and wrong. Of course, you can be long and wrong. Everyone was long in 2008. Everyone lost their shirt. Everyone was long in 2000. Everyone is long now. In fact, hedge funds are longer now than they've ever been. Not that that means anything, because they as an asset class, it's been doing so poorly. But generally speaking, everyone is going to front run the Fed because they know that it's the only thing they can do to stay in business. Now, once the Fed fails, which ultimately they must do when the currencies collapse and interest rates soar, well, so what? They all lose money. And the same goes for sovereign government. They're going to all front run what they know is happening, and the end game will eventually be hyperinflation. But until that time, while the whole world has been saying that rates are going to go up, I have been screaming all year long that the U.S. 10-year rate, for instance, is going to go down to Japan-like levels until that hyperinflation hits, which maybe it'll be tomorrow, but maybe it'll be in a couple of years when we look up and the U.S. 10-year rate is 0.2%.
And this brings me to economic Mother Nature, as you coined the term. Economic Mother Nature doesn't like any of this stuff. Economic Mother Nature is saying, hey, you're making it sunny when it should be raining. You're making it warm when it should be cold. Economic Mother Nature is going to bite us back. Tell me what you think Economic Mother Nature is going to do.
Right. Well, it goes to an article I wrote called Place Your Bets, Wall Street versus Mother Nature, and another one called Ramifications. Look, if you're going to try to push gold and silver prices below their cost of production, if you're going to take interest rates way below where they should be and cause these great malformations of the economy, and take stock price valuations above where they were in even 2000, at a time where you have so many things going wrong with the world, you're going to eventually have a catastrophic collapse. And again, people who say, oh, the stock market's up, that must mean things are fine. No, take a look at everything that's going on. The CRB commodity index alone is down 13% in the last 2 months. Oil prices are below 80. I wrote last week an article called The Unspeakable Horrors That Will Be Unleashed by Collapsing Oil Prices, as all these nations that have budgets based on $100 oil, and the shale industry that's so hyped up here, which is apparently depleting like crazy and needs $80+ oil just to support all the Wall Street funded loans that were put into it. I mean, across the board, you're seeing commodities crash. You're looking at currencies crash around the world. This is what I call an article a month ago. The single most bullish precious metal fundamental possible is the currency volatility that's caused by people racing in and out of the dollar and causing all inflation around the world and social unrest and what I call the final currency war. All these things are a manifest of economic Mother Nature showing what's going on. And of course, the way she's really going to get back at us ultimately is the fact that the manipulators cannot create physical gold and silver, and we've seen massive, massive drains of physical around the world. Record demand this month will easily be probably the highest amount of demand for a single month on record. If you look
for
at
gold and silver?
Gold and silver. You look at what the numbers that are coming out of China, out of India, out of the U.S. Mint, where we're on pace to have the third largest month ever of Silver Eagle sales. So again, we're on the precipice of economic Mother Nature showing all of her claws.
Well, I want to talk to you about mining costs. I mean, silver is in the $17 range. Gold is in the 1,200, 1,220, 30, 50, in that range. And you said that they've drawn a line not only at 2.2% at 1750 silver, at 1250 gold. You're saying the Fed's drawing the line, but can't that line be erased because they're drawing the line at or below mining cost? I mean, they say silver, I've had several people on here, and they range the mining cost of silver between $23 and $25 an ounce. And the mining cost of gold, at least on a lot of the fringe mines, is at least $1,200 an ounce. Some people do it for $600 an ounce, but $1,200 an ounce is a point where most of them can make money.
Right. Well, when you say the 1250 and the 1750, I call those lines in the sand. They're not permanent lines in the sand. They're just the current lines in the sand. This is their strategy forever. They pick a number, it's arbitrary, and they hold it, and then they move up to the next number when they lose that, or they move down when they're in control, etc. But aside from that, that's just a little trading game. But when you talk about mining costs, for instance, if we talk about silver, everyone should Google Miles Franklin Silver All-Star Webinar Panel, which we did last week with David Morgan, Harvey Organ, Steve St. Angelo, and Bill Holter, and we hashed out all these things that you're talking about. Look, essentially, the cost of mining silver, and silver is far more egregious than gold, is somewhere in the low 20s. David Morgan said 22, Steve St. Angelo said 20. But again, these are just the variable costs of mines that are already in production of the world's best miners, which only account for a certain percentage of production. The smaller miners have much higher costs. And when you talk about the more important cost, which is the sustaining cost of the industry, that's the cost of actually replacing reserves or, God forbid, increasing them. And as we know, reserves are in free fall right now and probably will be in free fall for the next decade because of all the capital strangulation from what the cartel's done. There's no doubt in our mind, the simple math says silver must be somewhere in the low 20s, perhaps as high as 25, to be profitable, and it has to be closer to $30 or perhaps more to have any kind of sustaining industry. Now, when you talk about gold, it's a little different because there's so many different gold provinces. We know last June, the CEO of Goldfield said the industry needs $1,500 gold to survive. So my guess is that's the sustaining price of gold, and there are so many small gold producers that are doing poorly. Remember, at the end of December, that's when mining companies do their end-of-year reserve calculations and write-offs. Last year was a bloodbath. This year, if silver ends the year in the $17 range, there's going to be no reserves left in the industry, and you are going to see major mergers like we saw in the oil industry briefly in the late 90s when the oil prices went down. I'm talking about all this jabber between Newmont and Barrick. You can bet that they're going to merge, and so is everyone else. And you know what mining companies do when they merge? They paralyze. They close off everything. They recalculate. They high grade. It takes years and years. I mean, on our call,
cut costs.
And our call on silver, we all agree that if silver price doesn't change from this price in the next few years, we're going to see at least a 25% drop in silver production and maybe as high as 50%.
So can they run out? I mean, Harvey Organ came out and said, the silver is mostly, the above ground silver is mostly gone or in very short supply. And, he had his website taken down by court order. He still doesn't know much about it. But I think wasn't taken down because he's a fool. I mean, he's talking about how the go for rates are manipulated, and that there's very little actual real supply at COMEX, and that there could be game set match this year in terms of that they'll run out and they'll have a default, or we're going to pay cash only or whatever. So a lot of people are saying, hey, well, they're having record sales at the mint for gold and silver eagles, and they're having China and Russia is adding, millions of ounces of gold. Why aren't they running out?
Well, I mean, there's shortages, generally speaking, in both metals, but silver is it's far thinner and far smaller, and that's why there's so much focus on it. And frankly, it's why the cartel attacks it so much, to make people terrified of it, that it's so volatile. But the fact is, yes, this month will be a record month, or one of the top months ever for U.S. Silver Eagle sales. In Canada, this year will be a record year for silver maple sales, as it will be in the U.S. Mint for the whole year. Last year's a record. They're going to beat both. Last year was a record for Indian silver imports, despite the tariffs. Right now, we're on pace to match that. So across the board, the demand is enormous. And then you look at the supply, and for all the shenanigans that are out there, the COMEX only claims to have about 65 million ounces. That's chump change. And I wrote an article last week called $50 million of silver. That's it. That's all the inventory the Shanghai Exchange has. After that, now they're inviting the
right
whole
now.
world.
All they have is 50 million.
Yes, they have 100 tons. That's $50 million. It was 12 times that amount last year before the big smashes occurred. I mean, this is the biggest physical delivery mechanism on the planet, and there is no inventory there. They admit there's no inventory. The COMEX, pretty much no inventory there. And what Harvey's focusing on is the absolutely enormous open interest in the December contract. It's like 120% of world production compared to like 5% for all the other commodities, and it keeps going up and up and up. So, could it happen this year? Certainly. Will it happen? I don't know. But again, if economic Mother Nature is ready to unleash her tsunami, the odds are that if you pick a market, silver is the most likely one where you're going to see it first.
In other words, you're going to see a price spike. It's going to go back to where it should be, not a price spike where it's going to go to the stratosphere. You're saying that it's what if they weren't manipulating? What do you think silver should be, and where do you think gold should be if they were if it was just pure market, give and take, if there's just pure market movements and supply demand, and they weren't manipulating, where do you think the prices would be?
Well, it's I've written about this before again, and it's not a prediction. I'm not a stock analyst anymore who said this is my price target. I'm saying you do the simple math. It's the same math that came to $900 an ounce back in 1980. You say, look, how much money supply does the U.S. claim they have printed, okay? And how much gold do
Trillions.
they claim they have in Fort Knox? You divide it, and you get a number. Now, if you make that division, you're going to get somewhere in the order of $15,000 to $20,000 an ounce gold. It's that simple. Of course, the money they printed is far more than what they say. Remember, they got rid of M3. They've done $16 trillion of secret loans. They do swap agreements with the ECB banks. Who knows what the real number of money supply is? And then, of course, gold. Do they have 8,134 tons at Fort Knox? I doubt they have anything. So, again, you want a bare minimum? That's my bare minimum level. And every dollar they print, of course, that price goes higher. And then you apply, my average gold-silver ratio belief is it should be somewhere between 5 and 15 to 1. And that would get you $1,000 to $4,000 an ounce. It's very simple math.
Well, $4,000 an ounce for silver?
For silver, yes.
You think right now that silver, if they weren't manipulating, that the supply-demand quotient would probably be pushing silver at $4,000 an ounce now, today?
At least $1,000 an ounce, in my opinion. But again, you have to think of what the world would look like. That would mean that the powers that be have lost control of markets. They've lost control of everything. It will be a very ugly world. It may even be the start of a hyperinflationary world. But you ask me, my analytical, how do I get the numbers of what it should be today? That's what it should be today. 15,000 to 20,000 gold, 1,000 to 4,000 silver.
Wow. Unbelievable. Well, I'll tell you what, Andy Hoffman, I appreciate you having you coming on and schooling us. What do you think the world looks like at the end of this year? Do you think we have a fallout? I mean, Christine Lagarde was at the beginning of the year at the speech at the IMF talking about numerology. Really, her speech at the press club, Washington Press Club, I believe it was, and the Washington Press Corps was there. And she was talking about how, magic number 7 and, 2014, 2 plus 1 and 4 equals 7, the magic power of 7. And she did this in a speech in front of a room full of reporters. And everybody was like, this is okay. It was a policy speech. And so what do you think the magic 7, what will happen this year, do you think, by the end of the year? Do you think we have some major a calamity or economic fallout, or some major, like a Bear Stearns or a Wachovia go under, or a who knows, a big bank over in Europe go under?
Well, look, you just never know. I mean, first of all, we did have a big bank in Europe go under as we Santo just a few months ago. But again, I mean, we're talking about 6 weeks' time or 12 weeks' time. I'm not sure what will happen in 6 weeks. I'm not sure what will happen in 6 months or even 5 years. But I know, generally speaking, the trend. It is very, very possible that something happens by the end of this year. Look at all the geopolitical stresses. Look at all the market stresses. Look at the economic stresses. Look at the Catalonia. I mean, you want a catalyst. Catalonia, Spain is voting whether they should secede from Spain in 2 weeks on November 9th. They have 25% of Spain's tax revenues. In my opinion, if they vote yes, Forget Scotland. This will be 100 times worse. And then, of course, you have November 30th when Switzerland votes whether they're going to reback the franc with gold.
Yes.
And it's always been my opinion all along that that vote depends on how markets are doing. If markets are doing very poorly, and God forbid for the cartel that gold's going up, I think there's a very good chance they vote yes. In fact, the first polls just came out and they were favoring yes. So again, you have many, many potential catalysts out there. We're on a tightrope right now where the central banks and the money printers are just desperately trying to hold on to some semblance of calm. And will it be the year end? I don't know. Will Harvey Organ be right that someone will try to take delivery somewhere? Maybe, I don't know. But it's close. It's close. Whether it's 3 months, 1 year, 2 years, it's coming.
When it does come, will families just be wiped out? Will you lose your money in your stock market and your
Absolutely.
bank? Everything goes.
Lose everything. People have lost everything already in 2000 and 2008. But this time around, it's going to be far worse because there's no cushion. Because half of Americans, for instance, are entitlements. All these socialist nations in Europe, where a high percentage of the population need governments that are collapsing, and even in China right now, where you're seeing an historic collapse of their real estate and credit bubble. So I don't think there's going to be any real cushion. Certainly, central banks don't even have any ammunition left, even if they wanted to fire it or people would trust them to do it. So I think people are going to lose a lot, and a lot of people are going to lose everything, and there's going to be major social unrest. And that's why it's not just about buy gold. It's about think about what the worst scenario could be, because there's a pretty good chance it can happen.
In other words, a deeper, harder, more profound crash that we don't just crank up the printing presses and get out of like we did in 2008.
Yeah, I mean, this is decades and decades and decades worth of a mad experiment in global fiat currency regime, and it's going to come to an end. And no matter how we get to the other side, it's going to be ugly. The other side one day will be good, but the other side may take a long time to get to, and there's going to be a lot of pain and hardship, and hopefully not world war.
Andy Hoffman, Miles Franklin, he is the marketing director there. Andy Hoffman, thank you so much for joining us today on USAWatchdog.com. You have a great analytical mind. You are a prolific writer. We'll be linking to Miles Franklin and also your section on the site after this interview. Thank you very much, Andy Hoffman at Miles Franklin.
Thank you, Greg.